So here again, today I'm going to be taking you guys on how you can trade supply and demand, not the one that they do show you. You are going to trade this differently. When it comes to this my channel, I emphasize on your entry because your entry will give you an edge in the market. There are people who can also take this trade and make it 1:2 risks to reward. But you can still take this same trade and you'll be having 1:30, 1:20, 1:15 weeks to reward. I always emphasize on this channel about your risks to reward. So I'll be showing you how you can take supply and demand right here from your H1 to your 1 minute chart, how you can trade this the right way. If this is the kind of content you are looking for, do well to subscribe because I put in my time, my effort to show this to you guys so that you can. It's not about you taking trade every day. It's not about taking the trade every day. But if you hit a loss, let it be a loss. If you hit a win, it should be a win for you. Let us go to the chart. Let me show you how you can do this step by step. So guys, on this strategy, we are going to be using J40. So any time frame you want to trade from, it works. But I'm going to be using H1 on this strategy. And the things we need when it comes to this strategy is number one, we need our market structure. Number two, we need our sessions indicator. Number three, we need Fibonacci retracement, which we are going to be using on our 1 minute candle. Then number four, we need a candle confirmation. So let's get to the chart. Let's start. So first, we have to mark our structure. We have to show you the structure we are looking for first. So this is a buy scenario. First, we are looking for something like this in the market. Market gives us a high, it gives us a low, it gives us a high, it gives us a low, it gives us a high, and it gives us a low. But there is something happened. This structure, we've seen that this market pulls back at least to the 50% of this one, or almost close to this one. But this very one, this market didn't pull back. Let's check. You can see this leg right here. So we can see this leg right here. It pulls into this leg right here. And we've seen this one, it hanging. There is a higher space right here. This very leg gives us a higher space that the market didn't come inside. And it breaks, it pulls back right here, breaking structure to the downside. So, as you can see, this pullback was not too much. This pullback to the downside was not too much. But for the sake that this market didn't pull back to 50% of this range, it can give us that strong feelings that whenever this market comes inside this zone, we can buy this market back, especially if this market has imbalance between them. I've already talked about how you can trade with imbalance, how you can spot your imbalance. If you haven't seen that, you can check this video that will pop out at the end of this video. You will see a video that will pop up, or you go through my timeline, you will see the video about imbalance. So you check it out, how you can spot your imbalance on the chart. So this is the first type of structure we are going to be looking at, which is to say this structure breaks, this market breaks structure to the downside. This market breaks structure. This market breaks structure to the upside and it pulls into this structure. It breaks another structure right here, and it pulls back up very far away from it without coming back to it, and it breaks structure again to the upside, which is this one. But upon the market trying to retrace, it was able to grab this very one and come into this one. So that is to say, if this very market, if this very leg inside here has an imbalance, we can consider it to take our trade from. If we have any entry criteria on this zone, we can take our trade from here. So this is the first zone, the first structure we are looking at. So let's check for another type of structure we are going to be looking at in the market if we found it. So we are going to be looking for something like this. Very simple. It's still a uptrend. If the market is going up, we are looking for something like that as well for us to take our trade to the upside. This is a simple break of structure. So as this market was going up, we are looking at this zone. If this market come into this zone, for us to move down to our M15, M15 to M5, M5 to 1 minute, then we use our FIB and we FIB the we flip the last candle on our 1 minute. Then anything that the fib give us, we can use that as our entry. So this will be the second for a buy setup. So if we see something like that, we can take our trade. Another structure we are going to be looking at will be something like this, and that will be for a sell trade. To be something like this. Simple structure breaks to the downside. So what we are going to be looking at, which is to say, if this market pulls back into this zone, we can take our trade and to the downside. If the market pulls into this zone, we can go back to M15, go back to M5, go back to our M1, and we look for a confirmation entry along with our fib on our 1 minute for us to take trade to the downside. So don't forget to subscribe to this channel, turn on notification bell. Let's grow together. If you have any questions, feel free to ask. With my free time, I'll come along to make sure I answer all your questions. So this is what we are going to be looking at. Then for the sell scenario, if we have a complex structure too, we can as well look for our entry, which can be something like this. Breaking structure, breaking structure, breaking structure. So this is still another complex structure itself, but simple. So if market pulls back to any of the zone, we can take our trade to the downside. We don't take our trade on our H1, we take trade on our 1 minute. Without 1 minute, we don't take a trade because we are looking for a good arrow. If it doesn't come to us, we don't take it. If it's 1 to 2, we don't take it. So let us go to the main chart. Let me show you how you can implement this in the real market. The only thing is when you come to trading, you are going to be losing every day. So your entry is your gold when it comes to this. Your entry will save you in the long run. Forget who says you are chasing this, you are chasing that, but your entry, if you can stick to one thing and make it your own, you are going to survive the raining days when it comes to this market. So let us look at the first pattern I was talking about, which is the buy scenario, and this is a complex structure. So first, we have to mark the structure of the market before we know anything to do. Before anything, let's mark our structure right away. So I'm going to turn my chart to my line chart so I can see it properly. So I'm turning my chart now to a line chart. You can see we had a structure here. We had a zone here, and this market breaks above this zone to the upside, leaving us with a structure right here. It left us with this one, and the market didn't come into this. But what happened is that the market moves to the upside. It moves to the upside without looking back. This market pushed to the upside and it pulls a bit down. You can see this retracement. It's not even up to even 20% of this zone. It hasn't come into this zone at all. You see the retracement. So this is what I was talking about. It's just a kiss. So and it popped out again. It popped up again to the upside. So upon this market trying to come back to retest this very zone, the candle here was not strong enough to hold this market back, so it had to fall into this zone, because inside this zone we had an imbalance inside this zone. So the market maker, when they see imbalance in the market, they like to go into where the imbalance is for them to fill the space before they go back up. So they come inside this zone and they move. So there is something I want you to take home right here. Upon this market pulling up, you wake up in the morning, you see that, oh, the market is approaching this very zone. You have to turn your chart now to a candle. So once you turn your chart to a candle, you see there is a zone here. You see there is a zone. I tell you that for you to have imbalance, you need a candle. You need a candle that goes together, the same candle, which is, if we can see, there is a candle here. We see this green candle here, this very one. You can see there is no other candle that close above this candle, this very one. It's a green candle. This one is just an inside bar. So this is a green candle, followed by this one, followed by this one. So we have 3 candles in this zone. And then we see this imbalance right here. There was an imbalance right here. I talk about this imbalance. If you don't know, you check the video that will display above this video, or you check my timeline, you will see something like that. So imbalance are this candle that has space that no other candle has closed in between. So that is imbalance. So you should have that in mind. Then here is the last down candle. Here is the last bearish candle that lead to that break to the upside. Here is the candle. That is the candle there. So that is the zone. So upon you marking out this zone right here, you scale it down to the future. You mark this zone. You wait for the candle. You wait for the market to come inside this zone. Once the market come inside this zone, is for you to scale to your M15. Scale to your M15. Let's see something. The reason I say you should scale to M15. You are scaling to your M15 to see where imbalance is in this market. Where imbalance is something that will give you that mindset that, this market must surely come into that zone. So that is our imbalance. That is our imbalance right there. So you mark it from the imbalance. So that is the imbalance right there. So scale back, scale to your M5. Now we are on our M5. On our M5, we are still going to trace our imbalance. So on our M5, we have this imbalance right here. We have this imbalance right here. So let us scale to our 1 minute. Any imbalance that is present in our 1 minute, that will be the last imbalance we are going to be taking. Any imbalance that the market move into and give us a bullish movement from that one, that is the one we are going to be taking, and we are going to use our FIB to make sure we FIB everything out. So here is the zone. Here is the zone that we mark. You can see from this zone we have imbalance right here. On this zone we have imbalance right here. Let's mark it. Okay, we have imbalance right here. We have imbalance here. That is our imbalance right there. Two imbalance are important. We have this one, this one and this one, which is two imbalance are important. Let me delete the zone. Okay. So as the market come into this place, or upon the market coming into the imbalance, what you should be looking for is three candle push to the upside. Since this is a buy scenario, you need three candle push to the upside for you to fit bid out. You have one here, you have two, you have three, the same candle, one, two, three bar play. So now it for you to fit it out. Pick your Fibonacci 2 retracement. Since it is a buy trade, start from the bottom, flip it to the up. So now start from the bottom, which is right there, flip it to the up of the green candle, the three green candle. So that is how it is. So that is it. Now look for the 50% of that and place your trade. You place your trade at the 50%, which is right there. Then your stop loss has to come below. It has to come below. Then you have to move to your H1 and look for places that you will target. So let's move to H1. Let's look for zones to target. So on my H1, we've gotten this zone that is not yet liquidate. So that will be the first zone to target. This zone right here will be the first. And we have our second zone right here. We have our third zone right here. Our third zone right here. So you place your trade. Target here, that is 1:13. That is 1:13. This is your 1:19, which is your third target. That is 1:19. So just by doing that, following the rules. So that is it for the buy scenario. So for the sell side, we see that this market is breaking structure to the downside right here. You've seen the market breaking structure to the downside right here. So let us look for our zone right away from here. So we've seen that there was a leg here which the market has broken to the downside. If you turn it to a line chart, you see that the market has broken structure right from here. And here becomes our point of interest, this very zone here. Then if you turn this chart now to your line chart, your normal chart, you can mark the candle out, which is the last bullish candle before the break of structure to the downside. So another thing you should take is, even this structure carries imbalance inside. There is an imbalance inside here. So now for you to move to your M15 and look for another imbalance. Look, this is a bear scenario. The last bullish candle, which is right here. Last bullish candle, which is right here, before the break to the downside. You mark that out. So let's move to our M15. On our M15, we are still going to be looking for our imbalance. So we mark that out. Here is our imbalance right here. We marked that out. Then let's move to our M5. We are still going to mark out our imbalance. Don't forget to subscribe, guys. Subscribe. Turn on notification bell so that anytime I drop a new video, you'll be the first to get notified. So this is my 3 minutes, and that is my imbalance. That is my imbalance right there. That is my imbalance right there that I just marked out. So now I'm moving to my 1 minute. We use all the time frame to make sure that everything works out perfectly for us. So here is the zone I mark. So on our 1 minute, there is imbalance right here. We have that imbalance there. We have another imbalance above right here. So let us go to future and check which of the imbalance that the market tap into. So we've seen that the market was able to tap into the 2 imbalance. So now it's time for us to look for our candle, the 3-bar play candle. So we have 1 there, we have 2, we have 3. So now it's for us to flip it out. Since it is a sell trade, we are going to flip from the up till the 3-bar play. Don't forget to subscribe. So we flip from the up till the 3-bar play, not the wick. So that is it. Now it is for us to enter our trade on the 0.5 pip retracement level, which is right here. Then that is where we are going to place our trade. Our stop loss has to come below this 0.786 retracement level, or the main low, which is the main high right here. So we place our trade like this. Our stop loss goes above that high right there, and we are going to look. We have to go to our H1 and look for a zone which we can TP. Let's go to our H1 and look for a zone that we can TP. So that is our H1. We've seen that this very zone was already liquidated, and we are left with this one, and we also left with this one here. So that is our 3rd target, and our 4th target will be this one, but you can go 1:3. That is 1, 2, 3. So that is our 3rd TP. It's right there. So let's check. Here is our first. Okay, here was our first TP, and here becomes our 2nd TP. So the first TP was able to give us 1:17. That is our first TP on the H1. Then our second TP, which is this one, was able to give us 1:37. And our last TP, which is this very one, that one there, was able to give us 1:48. So this is how you can make use of this from H1 to your 1 minute. And all these things is happening around London and New York section. You are not to use Asia. You should stay away from Asia section. You can see this happen after London. It's either you see trade on London or you see trade during Asia. You see that market comes into that zone around New York section. So this is how you go about this. The sell scenario, the market come into this zone around New York section. So